Hey, good morning everybody, it's Brian. Hope you're doing well today. It's Tuesday, the 18th of August. Just going to do a quick update about the markets, let you know what's going on, what I'm looking at, and then let you get on with your trading. I do have an update from a trade yesterday. I didn't post in the afternoon for whatever reason, just got busy, and by the time I remembered it was like 7 o'clock at night, and I didn't feel like logging on and doing a video that late, so I'm going to do it this morning. Anyway, let's run through it. To get things started off, we always want to look at news. So before we begin our trading day, the best thing to do is always check out what news is coming up and understand the impacts that it could have and how it could have an impact or why. So that way you can make a decision around if you want to, leave a trade on. If you've got a trade on coming into that news, you want to leave it on, or do you want to close it out, wait for news, and then re-enter? I never recommend entering a new trade around news. There's just too much that can happen unless you're really good at filtering out emotion. That whip or just the volatility that occurs right around news can drive some emotional decisions rather than decisions that are, unless you've really got a good plan, you've got something good experience sticking to it, it can create emotional decisions. So I always recommend just let the news do its thing and then come into the market after that. But if you've already got a trade on and you've got news coming up, you need to kind of understand the potential impact of that news so that you could adjust or close out the trade if you need to. So anyway, with all that said, what news is coming up today? I used the Forex Factory calendar. Everybody's got a calendar, wallstreet, Bloomberg. Everybody's got news calendars out there. Some are probably more robust than others. I've been using this one for 12 years, so I'm just the most familiar with it, and this is what I stick to, and I've never looked for another one. So with that said, there is some news coming up. We've got building permits and housing starts. Both of these are listed as low impact, and they are typically, the one thing I would say about them is these are seen as leading as leading indicators. If we've got buildings slowing down and we're not putting up, there's no new construction coming in, that has a trickle-down effect. It's jobs, it's materials, it's purchase of goods, it's service jobs. There's a lot going on there. So that, even though it's listed as low impact, it can be a catalyst in the marketplace, and it's good to understand that. As far as direct impact to the forex market is probably lower. It could have a greater impact on the futures market, especially as we look at the indexes and the S&P on this. There's just that ebbs and flows, right? We broke a key level overnight. We've been struggling with a key level on the S&P, and we finally broke through it last night and closed above it. So we're looking for continued growth, which we'll get into in just a second. But if building is slowing down, that could drive a little bit of fear. There's still a lot of fear in the marketplace out there. Everyone's kind of trading with this, when's that next shoe going to drop attitude. I say everyone I know. Same thing I've been saying for weeks and weeks now, which is trade the trend, follow the trend. The trend's the big train that's moving. It's a freight train that's going in a certain direction, and by trading counter trend, you just keep jumping in front of the train, hoping it's going to stop, and it keeps knocking you out of the way. So trade with the trend. That's the best way to go. However, my personal opinion is that we're going to see a day of reckoning here pretty soon, and it's going to be ugly when we do. The thing is, no one knows when that's going to happen, so that's why you've got to have a trading plan. You've got to separate your personal opinions from your trading opinions. Trading opinions should be based on something quantifiable, something that's realistic, that's based on things that are happening in the market, that you can say, okay, this and this has occurred, and that's going to cause this, and that, therefore I'm going to take a trade. If you're doing it solely on opinion, you're never going to be consistent. That's what trading is about, is consistency. So separate your opinion from your trading plan, so that you can have a consistent plan moving forward. So we'll get into the plan in just a second for the S&P. Right. So anyway, that's what's going on over in the news department, which is there's not a whole lot of news that we need to worry about right now. Over here on the side of things, where we're getting started actually just now, 2 minutes into the U.S. foreign exchange session, looking to see what we've got for potential opportunities out there. Yesterday we talked about potentially the Euro CAD or the Pound CAD. Pound CAD, moved a little bit. It was at 60 some odd pips, when we entered the morning. Extended on down to around 90, so it moved. It moved a bit for us, but not as much as we would have liked. Euro CAD didn't really do anything. Stayed at a pretty low range. So coming into the day, what are we looking at? Well, as we lead off the session, we've got a really nice burst of divergence here between sorry, let's get this out of the way. Come on, Skype. Well, I'll leave Mark on the screen. That's fine. There we go. What was I saying? Oh, I was talking about the foreign exchange session. Yeah. So we've got a nice burst of divergence here between the CAD and the yen. CAD is moving to weakness pretty rapidly. Yen is moving to strength. And if we go over here and look at this one on our charts, that actually is looking pretty good. The CAD yen, looking for CAD to be selling, yen to be buying. It would give us a short opportunity on the CAD yen if this continues moving the way that it has. It's been trading right together. I mean, we can see that the CAD and yen have been just lockstep leading up to now. This is the first burst of divergence we've had where the CAD has broken below its midpoint and started becoming a weaker currency. Up until just a little bit ago, the CAD was actually one of the strong currencies in relation to the 8 majors that we watch, right? So, that's the Aussie, not the yen. My bad. Goodness, throwing off of what I'm looking at here. That is not a good looking trade. This is the Aussie. This is the yen down here. So as I was looking at this, my eyes initially thought that the Aussie was the yen. So I'm going to take back everything I said. Just rewind, and I didn't say what I just said. Although I will say over here, looking at the range for the day, it's only moved 28 pips, and its average is into the 60, 50 to mid 50s to 60 pip range. It only moved 28 pips yesterday, so looking at reversion to mean, we would expect some movement today out of the CAD yen to return back to what its typical range would be. So I do think there's a viable opportunity to trade the CAD yen. However, the direction that I was talking about just now is not correct, because obviously, as we can see down here, the CAD's been a strong currency. It just broke below. It just broke below the midpoint. The yen's actually been a weak currency for a bit, and it's kind of hovering around here, still below the midpoint. So we would need one of these to diverge. The CAD maybe pushing back above the midpoint, and the yen staying below, or the yen suddenly giving us a good push above the midpoint, and the CAD staying below. Either way, we would need to see some level of movement on one of these currencies in order to have this as a viable pairing. So I apologize earlier for looking at the wrong color here. It's easy. It's interesting how easy that can happen, though. So anyway, CAD yen, while it's not a great trade right out of the box like I was thinking it might be here, is definitely a trading opportunity, I would say, simply because looking at it of its range. You could almost, on this one, just play a breakout by hitting both and setting a breakout long at the top of the box and breakout short at the bottom of the box, and just seeing which way it gets some direction in. No one knows if it actually will move, but the odds are in our favor that we would see a return back to that mean, to that larger average, since we've already had a day that was far below, less than half of its typical range. We would expect to see something happening today. So keep an eye on that. Other currencies out there that we might have a look at. pound CAD again potentially, and euro CAD. Another one significantly below its typical longer term range here is that euro CAD. So potential opportunity there, especially if the CAD continues to break down and the euro stays above the midpoint. So that's some opportunities you might be considering there for trades. Over here on the S&P, starting out with futures, I mentioned we broke a key level overnight, and we did. 3,800 has been a tough level. Remember, our previous all-time high was 3,374-ish, and it broke it a few days back, and it's just been hitting its head here at 3380. So 3380, boom, 3380, boom, again. It just keeps testing 3380, and it's tested it yesterday as well. Finally, in off trading hours, it broke through. It's closed above it. It's never closed above 3380 before, so it closed above it. And now we'll see if on the longer term, it hasn't closed above it on the 4 hour here. So now we'll see if we can't reach 3,400. I think with 3,380 out of the way, 3,400 would be that next stop up here. This is no man's land. There is no previous resistance for us to even go by. So whole numbers, 3,400, maybe even a little bit ahead of that. That 3395 area to 3,400 would probably be the level that we'd be looking at, because I'm sure there'll be some selling pressure if it does push up here. There'll be some selling pressure ahead of 3,400. There'll be folks trying to get out before it hits that whole number, which will trigger a whole other set of selling and algorithmic selling. So bias is long. The 4 hour bias is long, the 30-minute bias is long. So we'd be looking to continuing to look for long trading opportunities. What that looks like I said, here we could look for a pullback to 3380, which has been a major point of resistance. It's been broken, so it becomes a point of support for us now. So a pullback to 3380 to bounce off of that would be one spot to look. Or just a break here of 3385 to see if it continues on. You might even look as low as 3375 if it pulls back that far. It's really, some of that will depend on what comes out of the housing news and how that's received and digested as the market gets going. Especially if there's any kind of a large delta from what we're thinking it might be. So there you go. So the bias is long on the S&P. So continue to look for long trading opportunities and run from there. Crude has flipped these. This is in a long bias again as well, where they're in agreement. So 4 hour bias is long, 30-minute bias is long. So we'd continue to look for long trading opportunities. What does that look like for us? Well, pullbacks would be the first place to start, which would be pullback down here to that 4280 would be the first pullback point to look at. If you're looking at breaks, 43 is right here, so you might look at a break of 43. What is this, 4310 area, and see if we break 4310, look to continue long from there. But whatever your plan is, you'd want to look for the long trading opportunities, since the bias on both the 4 hour and the 30-minute are in agreement. So the bias says continue to look for long trading opportunities, and that's the same for gold. Gold is flipped back over. We had a good run yesterday, and gold has flipped back to where we're in agreement. Long bias on the 4 hour, long bias in the 30-minute. You could look for pullbacks back down here to 2000 would be a spot to look at for this pullback area, or breaks of 2020 would be the next spot up if we're looking for a breakout trade. So if you're looking for pullbacks, 2006 is what's actually marked here on the 4 hour chart. So looking for a pullback to that 2006 area, or a breakout if it pushes through 2020, and see if we can't, if it doesn't pull up to this 2040 area. So that's what we'd be looking at there. As far as the trades yesterday, there was a trade yesterday. Oops, wrong one. There was a trade yesterday using the method where we watch for lower lows, lower high, a lower high. So for an upward trend, we look for a lower high and a lower low. The S&P yesterday was the only one where we had biases that were confirmed in the same direction. So we looked at the 4 hour and 30-minute. S&P was the only one that had biases in the same direction, and so therefore it's the only one that even considered a trade yesterday. So as that was watching, we did have a lower high and a lower low, and that was our entry point. Actually, it finally broke above here. It was established and it broke above. So you can see up, up, up. This one's a lower high, lower low. It broke through it and then chopped around quite a bit yesterday, just hanging at that 33.80 area. Finally, ultimately came back and stopped it out, stopped the trade out. It did ratchet off, a bit of risk. So the risk was about half of what it was initially on the initial entry, but took a loss anyway, which is fine. I mean, that's part of trading. We're going to have a loss, and as long as we can take a loss that's less than we had planned, that's always a good thing. We'd always rather take a smaller loss than we had planned on initially. As far as the crypto markets go, they just continue to rip. So I'm not even worried about crypto right now. I'd like to see it stall out before we start looking at anything else on crypto. If you're looking to continue to add to positions, you might be wanting to wait for some pullbacks to get into new positions, and it certainly is in a bullish market right now. That could be affected, if we see a big sell-off in our indexes here. That could trickle over to crypto, but at this point, like I said before, train's moving. It's moving north. People are, investors are feeling good. They're continuing to push that train in the same direction. There is that air of uncertainty in the marketplace, but again, that's personal opinion, not what's happening on chart. So we need to trade what's on the chart. All right, so that's it. That's all I've got for you for today. I'll wrap it up here. If I've got another trading opportunity that pops up based on the trading plan that we've been talking about, where we're waiting for lower highs, lower lows to be made in an uptrend, or higher lows and higher highs in a downtrend, and then entering on breakouts of those, we'll obviously talk about it and record a video for it. But for right now, that's all I've got, giving you some opportunity or ideas for potential trades to enter, potential areas to enter from, and potential currency pairings to be watching for the day, simply based on some really easy stuff to digest, which is currency strength and current ranges. All right, so that's it. Super easy. Have a great day, and we'll talk to you later. Bye.